Getting started as a beginning investor can be confusing enough, but Wall Street has come up with some interesting terms to make it sound a lot more complex than it really is. Today we'll break down what these common terms mean so that you can face them unscathed, so stay tuned. Hi everybody, welcome back to The Contrarian. My name's Logan. I really like to talk about overall success as well as investing, and also going against crowd thinking mentality. If you like these topics, just consider subscribing. Also, I want to make a disclaimer that this is not investment advice. Why would you ever want to listen to a YouTuber anyway? So, this is definitely not an exhaustive list, but let's get started. Ask price. This is the price to buy, the price that you will need to pay to buy a certain asset. Something that has a value to its owner, often used to refer to a specific tradable item such as in stock, commodity, or physical asset such as real estate. At the money. When a stock's price has reached the strike price. Averaging down. A trading technique in which you buy a falling stock with sound fundamentals and keep buying as it falls further. It works on the basis that the more you buy at a cheaper price, the lower the average price of your stock, and the more you will make, or the earlier you can sell at a profit when the price rebounds. Balance sheet. A summary of a company's assets and liabilities taken at a particular point, usually quarterly. Basis point. 1/100th of a percent. Bear. An investor who looks to profit from a downturn in the market as a whole or a particular stock, also known as being bearish. Bid price. The price at which you can sell your assets. Bull. An investor who looks to profit from an upturn in the markets or a particular stock, also known as being bullish. CDO, collateralized debt obligation, has a bad reputation because it triggered the 2008 financial collapse. CPI, Consumer Price Index. Some, including myself, might call it CPI because, like unemployment, the data is often manipulated to sound better than it actually is. Call option. In buying a call option, you have the right, but not the obligation, to buy a given amount of a stock at a known price by a known date. Day trading. Buying and selling assets during a single trading day. Depreciation. Fall in the value of an asset due to wear and tear, age, and obsolescence. Diversification. Spreading out your investment over different asset classes to decrease risk. Dividend. An after-tax profit distributed to shareholders. A fixed amount distributed per share held. EBITDA, also known as EBITDA, but I pronounce it EBITDA. A company's earnings before tax measurement of cash flow in relation to a company's market cap. ETF, exchange traded fund. The underlying assets of the fund are divided into shares, which are then traded. These usually follow an index. EPS stands for earnings per share, which is the profit of a company after tax divided by the total number of shares. Equity, the value of a company dedicated to shareholders, also calculated by assets minus liabilities. Federal Reserve, or Fed, is the central bank of the United States. Fiat money, a currency issued by a government that has no intrinsic value. FUD, FUD, fear, uncertainty, and doubt, pushed about a particular company or industry that is baseless. Growth investing, investing in a company with above average growth, hoping for that to continue. ICO, initial coin offering, cryptocurrency offering. IPO, initial public offering of shares, generally stock. Interest rate, fee paid to borrow money. In the money, when an option will make an option holder money if exercised. Junk bond, a high yield, lower rated bond. Leverage, increasing your risk to borrow more money in order to increase the profit or loss on an investment. Market cap is the total value of a company. Can also be calculated by total number of shares multiplied by the current share price. Option, a contract that gives an option holder the right to buy or sell a certain asset at a certain price by a certain date. Out of the money, when it is not profitable to exercise an option. PE ratio, the price of a stock divided by earnings per share. Put option, the right but not the obligation to sell an asset at a certain price by a certain date. QE, or quantitative easing, is a central bank's method of increasing the money supply. SEC stands for the Securities and Exchange Commission, which is essentially the U.S. regulator of markets in the United States. Share buyback is when a company repurchases some of its shares to increase earnings per share artificially. Short, also known as short selling, is betting against an asset, or betting that an asset's price will fall, usually through buying put options. Value investing, a lower risk investing strategy focused on finding undervalued stocks, generally less risky than growth investing. Volatility is the amount and frequency with which an asset fluctuates in value. So like this last spring in March, it was very volatile because the markets were falling at consistent amounts, pretty much every day. So that was a very volatile environment. Volume is the number of shares traded in a day. So that's all the words I have for you. That's definitely not an exhaustive list. I'm sure there's things that I missed that you want to know about, so just comment down below what those are and I'll try to answer those for you. So I hope to see you again.